2026. Even, this year is the first year of our new 5-year plan. We are just 3 weeks in this new year, in 2026, but we have witnessed a lot of crazy things, from Venezuela to Greenland. But the question is, does the market relatively stay calm?
Venezuela, it did not really surprise me because it's still a fairly limited shock, so to speak, in the sense that it has an impact on oil prices, obviously. For me, it was not a major market issue. What's going on with Greenland is a bit different, because here we're talking about a conflict between two bloccs, the US and the EU, which trade intensively across one another, who are political and geopolitical allies. And this actually should matter, because should it run its course and should the tariffs actually be applied, the impact on Europe could be significant. We don't know how the Europeans exactly are going to react in terms of response, in terms of retaliation. I think there will be some retaliation, but we don't know what the magnitude of it. If Donald Trump actually does what he said he would, and we end up with a 25% tariff in June on European products in the US on top of what we currently pay, then yeah, it's an additional headwind for our economy.
Specifically on this Greenland issue, how do you expect things will play out?
I think the Europeans so far have maintained a sort of principled view, which is that it's a matter of sovereignty.
Yeah.
There are various...
It's a principle.
It's a principle. There's another principal issue there, which is that we're all members of NATO, and normally we are geopolitical allies. So you normally don't do that among allies. So I guess the red line for the Europeans is really on the sovereignty transfer. Yeah. Now, the Europeans have been very clear that if the US wants to expand their military presence in Greenland, they can. Actually, the current treaty between Denmark and the US allows them to do that. So I guess this is what they will try to deal with the US, that maybe there's more military presence in the US without a proper transfer. This is probably the state of the conversation.
Let's talk something about the WEF Chief Economist outlook.
Well, the outlook is not too bad. I mean, generally speaking, economists as a community are not super optimistic. We're never super optimistic, but are constructive on 2026. There's an issue, obviously, about the possibility that these geopolitical issues end up having an adverse impact on the economy. Again, our baseline is that 2026 was going to be about absorbing the noises from 25. If noises continue to grow, then there will be probably some impact on confidence.
Let's talk something about China. We have the 2025 China GDP growth number. The headline number is 5%, meet our government target this year. So what's your general comment on that?
I mean, first of all, it's quite an accomplishment for China to maintain and to achieve a 5% performance when actually the headwinds in 2025 were significant. I mean, obviously the trade war with the US was significant. So that China managed to maintain quite a significant level of growth despite those headwinds, yeah, that's an achievement. Now, the issue for me is, where does this growth come from? And this is exports mostly. And seen from a European, sorry to be selfish, the way we're going to look at that is, yes, there's this resilience in China, which is obviously very positive, but it is so focused on exports that we still don't see the dynamics in consumer spending in particular, which would help our own exporters on the Chinese market. And this is probably how the discussion is being framed between the EU and China at the moment. I think on both sides, there's definitely a readiness, a willingness to try to do more business.
China has, starting from the September of 2024, China has made a very significant pivot to the policy pivot to boost the domestic consumption. And China already knows the importance of this domestic market to keep the economy sustainable. And China has already emphasized that this year and maybe the next 5 year in the next 5-year plan, and boosting the domestic demand is the top priority. We are on the right path, but just very slow.
It's a matter of relative speed. The political pressure on European governments become too high, and we've seen those examples. Governments across the world are hesitating right now. You can take the Canadian approach and decide to cut a very nice deal with China, a very cooperative deal with China. You can take the Mexican approach, which is to emulate the US and slap pretty big tariffs on Chinese products. Europe is hesitating.